Hi everyone, please check the pinned comment and let's go through my two Elliott Wave scenarios on Bitcoin, including a potential trading setup, starting with the more bullish scenario, which eventually turns bearish because I'm looking for an expanded flat, which is a 3-3-5 wave structure to the downside, where the target area for this green wave B is between the 1.236 and the 1.38, which is basically between 32k and 32.7k, also including the 2022 range highs at 32.4k. So maybe one can have a little bit of a liquidity grab before then an impulsive move to the downside in a wave C. Not to forget that one might wick further to the upside before seeing any continuation, and the rare target for a wave B expanding flat is the 1.618 sitting at 33.7k. I don't mind price wicking to the upside, maybe because of the volatility for the range highs as well, but closing candles above this level over here at 33.7k is something I wouldn't really like to see. If we then look at this complex structure, basically the wave B, we have then a 5-wave move in a wave A, followed by a WXY triangle eventually in this wave B, before then continuation in wave C. So a 5-3-5 wave move and then an ABC, where inside this wave B, we then have a zigzag in a W with a very extended C wave, followed by a 3-wave move in wave X, and then eventually a triangle move in a wave Y, because in a wave Y or a wave W and a wave Y can't be both a zigzag. So I was looking at another structure. Now this might be a complex, like maybe a WXY, but also a WXY can't be part of a Y wave. So maybe a triangle looks best, where in this particular scenario, if we zoom in, we could have a barrier triangle, which is basically a triangle where the highs are equal, but the lows are becoming higher, higher, higher. And if we also look at the CVD that we have going on at the moment, it could fit the CVD divergence that we have. So as mentioned in previous videos, we have the higher CVD divergence, bullish CVD divergence, where we have this low over here, making a higher low with this one, but a lower low on the yellow CVD line. So we have a higher low on price, but on the yellow CVD, we have a lower low. So that is a bullish divergence where the target is taking the high at 29.9k. So basically we have a bullish divergence between this low and this low over here. Now, the risk to reward ratio for a potential setup over here, if one would enter all the way up here, stop loss down here, and as you can see, it's not that great. You really need a big trade in that occasion. However, eventually, price moved to the upside and started to come down again. And this happened Saturday evening. So basically last night when I was not recording, I didn't record any video over here. My last recording was somewhere over here. So this all happened. All of this happened when, unfortunately, I wasn't making a video due to having real life and being with friends and family. So real life stuff going on, where what happened is price moved to the upside, moved to the downside, and created bullish divergences again. So now we had a divergence between this low over here, making a higher low, but as you can see, both on the blue and the yellow line, we created bullish divergences. So if we then look at these lows, higher low over here on the chart, while a lower low on the CVD, and also between this one and this one, higher low on the chart, but lower low on the CVD. And this could then give, based on the setup that we have as well, with this then being an A, B, and then eventually looking for a C to the upside, this could be a potential scenario or setup where one can enter around this area. Clear invalidation for a triangle is taking the beginning of the triangle here at 28.9k, for then a continuation to the upside. And then of course the question is, how high can price go? Well, that is yet to be determined, of course, based on the impulse or whatever it is we're going to get to the downside. But this is definitely a potential setup based on the scenario that we had over here on the lower time frames with the bullish divergences, as well as for this potential scenario in this then being a WXY, where if this is a triangle, it's very nice to see bullish divergences with the higher lows that are being made. If we then look at the more bearish scenario, which is not my preferred one, we have an ABC over here as well. So we have then a 3-wave or a 5-wave move in a wave A actually. So a 5-wave, 3-wave, and then you want to see another 5-wave move to the downside in an ABC. But what I don't really like in this scenario is that if this potential wave B is already finished, because with the bullish scenario, basically we're going to move to the upside and take these highs. That's why it's called the bullish divergence. We are going to move up, take these highs before potentially moving down, but at least taking these highs. But in this scenario, we're not taking the highs. So we then have this as a wave A, 5-wave structure, then some sort of a 3-wave structure in a wave B, and continuation to the downside. But what I don't really like is that we closed 1 hour candles above the 886. Now, if I actually switch to the 4 hour, you can see, well, hey, on the 4 hour, the 886 did not close any candles above the 886. So, or the price didn't close any candles above the 886. So yeah, that could be fine. However, on the 4 hour, I think we also miss a lot of structure, and I think it's just important to note at least that on the 1 hour that there are candles closing above the 886, which usually, especially when you range this close to the 886, and not to forget, price find kinda support on the golden pocket after breaking through, coming down twice now. This is not looking too bearish yet, right? So closing candles above the 886 usually, on probability wise, gives a very high probability the highs eventually are going to be taken, and then moving to the downside, finding support on the golden pocket, which was resistance maybe first and then support as the support resistance flip, is not very bearish as well. So currently scenarios that are, well, let's say to the upside are for me preferred. Of course, eventually price might be able to dip to the downside, but then the bullish divergences between this low and the potential low we're going to get are only going to get bigger most likely before then eventually upside. If we look at the lower time frames, actually you do see that we do have some bearish divergences going on between the high over here making a lower high on price, but on the yellow line we have a higher high on price, as you can see. However, on the blue line locally we have a higher low, but on the blue line a lower low. So it's a mix of like, it's a mixed bag on the very, very local time frame. But if we zoom out, you can see we have bullish over here, and we have bullish between the big low and these lows over here. But if price would move to the downside, then you most likely are going to see even bigger bullish divergences between the low over here and then the higher low that we are potentially going to make. So yeah, the upside is currently something I am looking for. I hope this video was helpful or valuable to you. Please check out the macro and high time frame scenario if you're interested, or video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.